So yeah, I just put a pretty good chunk of my portfolio into an ultra high yield dividend stock called PBR or Petrobras. This is a Brazilian oil and gas giant that's currently paying a dividend of well over 70%, and the position that I have is in PBR.A or PBR-A, which is obviously the same company, but PBR-A pays a little bit higher of a dividend. The company itself had an amazing 2022 like most oil and energy companies, and because of how successful the year was for PBR, the dividend payouts, as you can guess, were extremely high. I am pretty late to the party because if I would have invested around this time last year, I would have been paid about 55% in dividends, and depending on when I bought and sold, I would have made another 15 to 20% in capital gains as well, making the total return nearly 80% in just a few months. But that's of course assuming that I bought around this time last year, reinvested the dividends, and then sold at the very top, which we all know is pretty unlikely in stock trading or investing to time it perfectly. But either way, last year the company paid out crazy high dividends, and I've been eyeing this stock for just about a year now, and I put together a spreadsheet of all the dividends that were paid out from PBRA in 2022. As you can see here, it paid a total of 10 dividends in the year of 2022, including the dividend that was declared in November and paid out in January of this year. And the total amount in dividends paid for 2022 was $6.45 per share, which is pretty insane when the stock price is around $10 per share. This also means that if you were to have invested $15,000, you would have been paid about $10,000 just in dividends last year. But that's of course last year's performance, and now the question is, will these dividend payments stay consistent going forward this year? And the answer to that question is yes, but they won't be nearly as big as they were in 2022. In late 2022, a more left-leaning president was elected into office for the country of Brazil, which caused shares of PBR to fall, since the company is mostly run by the Brazilian government. I think it owns about 53% or so of the company. And usually left-leaning policies tend to be more focused on renewable energy rather than petroleum energy. On top of this new change too, oil prices have dropped recently as well, causing the stock price to stay fairly low, despite the stock being fairly undervalued. But just a few days ago, the CEO, not the president of Brazil, the CEO of Petrobras, made a public statement that the company will continue to achieve more market share and keep increasing fossil fuel output for decades to come. That's not necessarily a bullish sign though, because really any CEO of a large oil and gas company would say something similar, but statements like that are usually good things to hear for investors. With the stock price dropping significantly, depending on how you look at it, can actually be a good thing since the ex-dividend date is coming up in a few weeks here on April 28th. And the dividend payment is expected to be about $1 per share. And since the ex-dividend date is coming up in just a few weeks, and I just bought about $8 grand worth of the stock, I know some of you might be wondering if I'm doing the dividend capture strategy, and I guess the answer to that is not really. The dividend capture strategy is typically used by day traders to pocket some extra cash from dividends in the short term. Usually how this strategy works is you buy a huge amount of shares of a dividend paying stock a day or two before the ex-dividend date, and then after the ex-dividend date, or what's called the record date, you then sell all those shares. But because you owned all the shares before the ex-dividend date, you're then obligated to a pretty nice big dividend paycheck without having to hold long term. But this isn't really what I'm doing with my investment in PBR. I'm planning on holding my shares until at least the next dividend payout, which isn't for another almost 2 months from now. And once I get that dividend payment, I'm not really sure what I'll be doing with the position from there, since it is still pretty far away. I could continue to hold throughout the entire year and collect all the dividends that come in, or if the stock price rises significantly after I get that first dividend payment, I could also sell most of my shares and move the profits into other stocks or ETFs. So my timeline with this position is anywhere from 3 to 12 months. So pulling up my position in PBRA, looks like we're not off to a great start. I'm currently down about $900 or just under 11%, but I do own 845 shares, which means that when I get this upcoming dividend payment of $1.06 per share, unless I buy more shares, I should get a nice paycheck of about $900. Definitely not selling anytime soon.
I'm not leaving.
And I'm planning on buying a little over 100 more shares from about now until the ex-dividend date in about a month from now. As you can tell, this is a fairly risky position simply because the stock price tends to be pretty volatile, but I do have a little over $10,000 in cash as sort of a safety net, and it allows me to purchase more shares if I decide to. And I'll definitely be updating you guys on this position in the future and reveal how much I actually end up making in dividends from this stock, and if my total return ends up being worth it. But let me know in the comments below what you guys think of my investment in PBR and whether or not you believe it will pay off. As always, guys, thanks for watching, and I'll see you next time.